Hey everybody, Smart Silver Stacker here. Hope you're doing well. So we're going to get right into the silver market price action today. Silver's up over 4%, and more importantly, it's back up over $50 per ounce. We're going to take a look at some of the factors that I believe are contributing to this move in the metals, but also we're going to take a look at the silver price chart and try to answer the question, is this the next big up leg in the metals, or is it a sucker's rally that is setting us up for a rug pull? And in the world of physical silver bullion, I do have something very exciting to share with you, so check this out. Introducing the first ever 5-ounce silver maple leaf coin from the Royal Canadian Mint, a historic release with an iconic design that is available in a stunning 5-ounce format for the first time ever. Don't miss your chance to own a piece of minting history, available exclusively at sdbullion.com. All right, so this is the 4-hour chart of silver, and you can see that's a nice move today. And before we analyze anything else, I just want to say that silver being over $50 an ounce once again is an important distinction between the current bull market in precious metals and the previous runs in 2011 and in 1980, because in those markets, the silver price touched $50 and then corrected from there. It didn't go back over that price at all. So following the correction that we saw in October, where silver topped out around 54 and change, dropped all the way back down to 45 and change, there were a lot of voices out there on the interwebs, a lot of critics of the precious metals market saying, oh, that's it, silver's topped out, now we won't see $50 again for another decade. Well, clearly that's not the case. But I do believe there is some cause to be cautious here. I've talked in recent videos about the possibility of an ABC correction according to Elliott wave theory. So that theory states that sometimes when you see a correction in a bull market, it follows a pattern of an initial sell-off, that's the A wave, followed by a rally, a counter trend rally or a counter correction rally, that's the B wave, and then you get the final correction. Now, importantly, this move does not mark the end of a bull market. It simply is a corrective phase that can sometimes take this pattern. And I'm not going to delve into the reasons why, the market psychology and how this happens, but this does frequently play out. You might recall in last year's market, this was a dynamic that we actually saw play out several times on silver's chart. If you've been watching the channel for a while, then you are likely familiar with this. So how do we know if this is a B wave correction or is it the next major upleg? Because, I mean, this is certainly no guarantee. It's just a possibility. Well, one way we can try to determine which scenario we're in is we can use this Fibonacci retracement. So this is all based on the golden mean, and it pairs nicely with this Elliott wave technical analysis. If you draw the Fibonacci retracement from the peak of the silver market down to the bottom of this A wave correction, what you would expect to see here in a B wave rally is that the silver price would rise to this level, right around $51. That is the 0.618 retracement level. That is where you would expect a B wave to rise and then resume the correction. So I do not believe we are out of the woods yet, and this still remains a strong possibility. However, if we do see a significant move above $51, like say we get a close tomorrow or sometime this week above this level, I would say that is an indication that it's on and we're moving higher. And of course, if we get a close above the 54 and change, the previous high, that would also negate the possibility of this. And I would say that would mark certainly a good entry point. If we do get new highs in silver, that would suggest that we're about to make a big move higher. But I think there's a lot of reason to be cautious here. And if you've been stacking for a while, if you've been following the silver market for a while, then you know that as fast as silver can move to the upside and as exuberant as everybody can get during a bull run, that sentiment can shift very quickly and it can move even faster to the downside. So right now, I'd say there's a fair amount of uncertainty as to whether or not this rally is going to be sustained. Will we get this pattern, right? A crash, a rally, and a correction, or will we break out to new highs? We need to see where the silver price closes today and perhaps where it moves tomorrow before we really know if we're headed to new highs. At least that's my take, not financial advice. Nothing on this channel ever is. But one other indicator that this could be a B wave rally is the volume. Typically, what you will see is a declining volume as this B wave rally proceeds, and that is exactly what we're seeing. You can see, you can draw a slope on the volume here from the peak all the way to now, and it is a declining volume. So until we see volume tick back up, I would also say that this rally is one to view with some skepticism. The government shutdown is likely partially responsible for this move that we are seeing, or rather the end of the government shutdown. So it appears that we are approaching an end to this 41-day now government shutdown, and markets seem to like that. The government getting back into the business of spending money into the economy is certainly good for pumping up asset prices right now. This is the latest from Bloomberg. The U.S. Senate voted 60-40 on a procedural measure to advance a bill to end the government shutdown, with a group of moderate Democrats breaking with their party leaders to support the deal. I think this is in part a major catalyst for the move that we are seeing in the metals today, but there's more to it than that. Let's look at some of the other things that Donald Trump has stated recently, which to me suggests that assets in general are going to be pumped much higher, but are very bullish for silver. So this is one from yesterday from Donald Trump on Truth Social. I won't read the whole thing. It's on screen here, but I'll just read this last bit. A dividend of at least $2,000 a person, not including high-income people, will be paid to everyone. So basically, cue the helicopter money. The economy's in bad shape. You want to keep people happy, give them bread and circuses. This is the modern day version of it. This is no surprise. This is the guy who signed his name to the first round of stimulus checks the last time around. And if this happens, well, that cash has to flow somewhere, right? And there seems to be a lot of interest in the precious metals right now. So not surprise me if stimulus checks went out that some people at least would be putting that into hard assets like gold and silver. Leave me a comment down below to let me know how much you would stack if you got a $2,000 check from the government. However, this was more amusing than anything else. So Trump made that statement, which I think this is pretty clear that, what he's telling us here, you're going to get a stimulus check. But then Scott Besson went out and had to do some kind of damage control on this. He said that tariff dividend might come in lots of forms, which could be just existing tax decreases or higher tax returns. So don't necessarily go out celebrating just yet, but I would not be surprised. And if I had to bet money on it, I would say that we will in fact get direct stimulus payments to the tune of $2,000 per person. Of course, everything's going to be a lot more expensive, so that $2,000 might not go as far as you had hoped. But if I had to put money on it, I would say that it won't just be tax relief. It will, in fact, be cash into people's accounts, just like the last time around. In fact, once the economic crisis that we are experiencing really becomes manifest and we enter into a recession, I would not be surprised if there is a lot more than $2,000 sent out in the form of stimulus money. However, it's going to lead to massive inflation. So, again, not financial advice, but if I get a stimulus check, I'll likely just be buying silver with it. This was another one that Donald Trump put out the day before, suggesting that there may be 50-year mortgages in store for the American people. He compares himself to President Roosevelt here, and I think this is actually a fairly accurate comparison. It's not necessarily a favorable one for Trump, but he certainly does behave more like a big government, New Deal type politician than, a fiscal conservative. 50-year mortgages will do a lot of things to the economy, and I've seen a lot of criticism of this. People saying that a 50-year mortgage is no different than renting. Well, I disagree with that. You actually still own the property, you build equity in it, etc. And also you're responsible for maintenance of the property, right? Which is a big difference between if you're just a renter. People also have criticized this, saying that you'll pay more in interest, which I suppose is true, but you pay it over a much longer period of time, and you'll be paying that interest in devalued dollars. So a 50-year mortgage isn't necessarily a bad deal in that regard. The real problem is that this is going to lead to more borrowing. It's going to drive up the price of housing, because if you can afford to buy a certain house with a 30-year mortgage, you'll be able to buy a more expensive house with a 50-year mortgage because you can put the payments out over a longer period of time. And this will likely lead to inflation in terms of housing, but also it's going to put a lot more cash into the economy because it will allow people to borrow more because they're paying it back over a longer time frame. the money goes into the pocket of the people selling the house, and then they spend that into the economy. So more borrowing means more inflation, more cash being pumped into the economy. And that is sort of exactly in line with what we're seeing out of this administration so far. So yeah, you'll be able to buy a more expensive house with a 50-year mortgage, but all of the houses will be more expensive as a result of more cash chasing the same supply of housing. So, these are some of the developments which I think are contributing to this move. They portend a lot of inflation moving forward. So in the short term, could we get a rug pull here? Well, time will tell. We'll have to see how this chart plays out. I know some of you out there don't care for technical analysis at all, but you don't have to make this too complicated, right? What we're seeing out of the administration, what we're seeing out of fiscal policy in the U.S. is that there's a lot of money that is going to be created. There's a lot more debt ahead of us. There's a lot more inflation. And so for me, at least, in the long term, just stacking, dollar cost averaging is going to be the approach that I primarily follow. But leave me a comment down below to let me know what you think. Is this a sucker's rally? Are we about to see the rug pulled in silver, or am I just being overly cautious? Are we about to see the next phase of the bull market? What do you think about stimulus checks? What do you think about 50-year mortgages? Love to hear what you have to say. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker out.